Hi, welcome back to the channel. In this video, I'm going to be showing you the stock analysis of Applied Materials. Applied is a well-known semiconductor stock riding on a wave of growth in the sector. Revenue is growing quarter to quarter, accompanied by high gross and net margins. And the best thing is, Applied is in a segment of the semiconductor market with high margins and few competitors. So, let's get right into it. Let's start by understanding the business. Applied produces semiconductor equipment that is used to manufacture wafers. They have an array of equipment catering to many of the wafer manufacturing processes. And Applied also has metrology and inspection equipment to ensure the wafers are produced according to specifications. Applied has also found other use cases for its technology outside of semiconductors, such as in solar and display devices. Also, equipment manufacturers have a massive and stable revenue base in services. These are used to support the operations and ensuring the equipment is running at optimum levels in their customer sites. Let's take a closer look at the income statement to determine the profitability. As usual, I've turned these boring numbers into charts that show a clearer picture and trend over the years. The revenue has been rising steadily since Q1 of 2019 from $3.8 billion to $5.6 billion. These are record revenues. Note that the revenue was declining in 2018, but has since turned around and has been rising consistently since 2020 and has increased above the previous high of 2018. Further to that, Applied has published its future growth plans where the projected revenue is targeted to grow to $26.7 billion by 2024. As their exports are mainly to China, Korea, and Taiwan, there is a certain level of risk due to possible geopolitical situations. And also, 40% of their revenue is from two of their largest customers. The cost of revenue has risen in tandem as Applied is a hardware equipment maker. Gross profit is healthy and is also rising, and the gross margin is a solid 47.5%. The total operating expenses have jumped to $1 billion with increased investment in R&D. Sales and general admin have remained flat. After taking away the operating expenses, that leaves a solid $1.5 billion in operating income, and the net income is $1.3 billion. An important point is, while the recent revenue and profits are on the way up, you cannot ignore the fact that it was on the way down in 2019. It is the nature of the semiconductor market, with phases of overzealous build-up followed by oversupply, and the cycle repeats itself. But, as I shared earlier, the services component will provide a cushion during this downturn. That is why it is a crucial part of equipment supply. The net margin is healthy at almost 24%. The trailing earnings per share is $4.79 and trailing PE ratio is 28.63, a bit on the high side. Let's take a look at the cash flow next. Again, we see good positive cash flow from operations. Capital expenditures are also on the rise. That leaves with a healthy quarterly free cash flow of $1 billion. And Applied has been having positive free cash flow throughout 2018 till now, really solid performance. The financing cash flow has been negative due to dividend payout and stock repurchase. Applied has about $8 billion remaining in their stock repurchase plan. Applied's cash flow position has strengthened to $6.4 billion. The quick ratio is a strong 1.31. Applied's balance sheet is strong with tangible assets. There is a goodwill item of $3.8 billion, but it is just a fraction of their total assets. On the liability side, Applied has a long-term debt of $5.5 billion. It has remained at this level since 2018 and is about 23% of total assets. Applied pays interest of $61 million each quarter. It is 4.6% of net income. With the strong cash position, it would be great if Applied paid off some of its debt. It will strengthen their balance sheet even further and increase profitability. Book value per share has been rising but is just 12.9. And at the current price, the price to book is 10.4, pushing it to the overvalued region. The stock-based compensation is $84 million. That is about 6% of their net income. Applied is a well-run company, and with such good profitability, the management is reasonably compensated. Many tech stocks are not even profitable, but the CEOs are still getting massive stock options. Due to Applied's strong year-over-year growth, the PEG ratio is only 0.7, indicating that the price has not kept pace with the growth. So from a growth perspective, Applied is a value buy, although the PE is at 28 and the price to book is at 10. On the technical side, there is overhead resistance at 145 where AMAT got turned down a few times since April. If it can break above 145, then there is more upside to the price to around 175. On the downside, it is well supported at 130 and it just bounces off this support level. If you are already invested, it might be a good idea to hold on. But if you are not invested yet, I feel the risk reward is not in favor at this price. This video is part of the series of semiconductor stocks portfolio. If you are looking to invest in semiconductor stocks and profit from the semiconductor boom, do check out these other videos. Please subscribe if you have found this sharing useful. And I'll see you soon in the next one. Bye for now.